Hey guys, thank you for watching this video. Don't forget to hit that thumbs up and subscribe. I'm putting out at least one video a week, giving you guys absolutely free content that's gonna help you guys, whether it's long-term, short-term, just in finance and everything like that. So with that being said, let's jump back to the video.
Okay guys, what is going on? I know most of you already saw this title and you're thinking, how are we going to trade penny stocks? And I'm going to give you the brutal honesty that most people or most traders aren't going to. I've traded penny stocks, I've traded options, I sell premium, I have the long term. I do a little bit of everything, and the most consistent profits I've ever had comes from what I'm going to show you. And I've been doing this for years and years and years, and I really haven't kind of showed anybody this because nobody likes it because it's not sexy, it's not hot, it's not fast money, it's none of that. So with that being said, I'm going to show you how to really do this. Cue the intro. Okay, guys. So the best way to make money in the stock market is to not trade penny stocks. Yes, you can compound it faster if you're crazy and you happen to get lucky. I was very, very lucky. I was able to hit it at a hot stage. I was able to short a bunch of stocks. It was easier to find shorts when doing that, when I was in doing that, but now it's not. So you see I've got a couple of charts up here, and why one looks completely different. If you're a beginner or intermediate and you don't really know about options, you're not going to understand this chart down here very much. Now what I'm going to show you is the most consistent way that everybody else doesn't want to tell you about, and there's a few people out there that do, but it seems like everybody ignores them. So I'm going to tell you the truth. And where I make over 90% consistency, every now and then I have one that I have to roll, and that'll be something that we'll get into later on, is selling options. Now you instantly go, well, what happens if they go in the money? Well, there is a probability, and if we go over here and you can see where I'm lighting this up, and this is the one that we have right here. This is the 373 put, and I just come down here and I link mine to yellow. And it won't show up on yours, but I just right-clicked on it, and if you go to the very, very bottom, it'll show you. But I'm selling these, and it says out of the money up here. If you look right here, underneath puts, and this is betting that these options are going to go out of the money. So what did I do is I sold a 373 early this morning before the premiums fell. And what that means is a lot of options go to zero. So if you watch this chart right here, you can see that when the stock market ran up, these premiums popped up as well, but they didn't stay up. So this is the biggest thing here. And basically, as every day options decay, which means they lose value, and you can collect that premium. You can do that. I like doing this on SPY and SPX and the main indexes because there's a lot of volatility, or not a lot of volatility still. Well, there has been lately. But you can get a lot of liquidity, meaning you can get in and out of these trades without a problem. You can do this on Robinhood, you can do this on E-Trade, TD Ameritrade, Webull, whatever broker you're using. Yes, you do have to have a margin account. No, we're never going to use margin because we're literally going to have a max loss on every play. And you're going to know exactly what it is. And if this starts going towards that, I can show you how to get out of it and not risk any money. And that's the biggest thing in being able to roll over. And most people don't understand that. And that's what I want to teach more now than ever, now that we're in a choppy market where things are going up a lot. You can see that I have price alerts. So as long as this one, because we said that we have the 373 over here, I'll even highlight it. It'll bring up this order. I don't want to do that. But that's the 373 put. As long as it does not go down to 373, which is right down here, if I can find it in here, right here, if this one stays above 373 tomorrow at close, I will pull all the profit and collect all the premium, which I've already collected it, but I will get to keep it all. And at any point in time that I want to close this, even though say I sold it up here for $1.17, and say the next day it's all the way down to 71 cents, and I can buy it back at 71 cents, and I keep this difference down here. So this price chart right here is based off the option, and people don't understand that this thing just decays. So if we go here, well, that's not what I wanted to do. Let's go to a 1 hour chart. You can see it decays even more. So to make this video as short as possible and to make it as clear as possible, what you're going to do over here on the right side of the screen is you are going to pick an option that you don't think that there is a chance that the market's going to go to. And for instance, I don't think it's even going to go to 380, so you can make a little bit more here. You can probably make, more on that premium now, but I wouldn't be going to the 27th. I'd be going to the 29th. That's this Friday's, and then going out an extra day because, again, the 27th is going to expire tomorrow. But if I was doing this earlier in the day, I did do the 27th because it's expiring tomorrow, and I want to collect my premium. You can see all the stats of out of the money. You can choose whichever one you want. Again, that 373 makes sense to me, and why it's not going to go in the money. Obviously here you can understand why. And then I'm going to collect all this premium and consistently grow that account more and more and more. And this is another way on how I get technically free shares, is I make the money here on the spreads, and then I instantly put that money back into stocks that are going to pay dividends monthly and stuff like that. So that being said, thank you guys all for watching this video. I hope somebody understands this. If not, look up vertical spreads or credit spreads, and there's going to be more information out there. But this is by far the easiest way to do everything. I will see you guys in the next video.